Dell Technology reported their full year 2024 earnings on February 29th, and the market approved despite revenue being lower. You guessed it, the AI boom has spread to Dell as server demand seems to have picked up, though growth rates, which we'll see in a minute, don't support that thesis. Dell reported 88.4 billion in revenue to end 2024, down 13.5% year over year. Gross margins improved though by 6.4% to 23.6%. Operating profit was down 10% to 5.2 billion, but net income was up 32% to 3.2 billion, driven primarily by better net interest expense. Dell's market cap stands at 87.3 billion at the time of this writing. Market cap to net income ratio is 27.2 times. Looking at the 5-year revenue, we can see that 2024 was one of the worst performing years coming off the COVID boom. 5-year growth rate has just been flat at -1%, with a 3-year growth rate down 4.4%. Gross profits too have contracted by 6% in the 5-year period and 1.6% in the 3-year. Operating profit, though, has been better with a 5-year growth rate of 14.7% and the 3-year rate at 3.8%. Net income, however, has been contracting by 7% since 2020 and 16.7% since 2022. A closer look at the business line revenue, we can see servers and networking has only been growing at a 0.5% clip in the last 5 years, finishing 2024 at 17.6 billion. The storage business has been contracting, however, slightly down to negative 0.7% in the last 5 years, generating 16.3 billion in full year 2024. The yellow column, operating income, is for both business lines together in aggregate, growing by 1.4% and slightly better in the last 3 years to 4.7% to finish at 4.3 billion or a 12.6% margin. The commercial and consumer business, their largest business line, didn't quite fare as well as servers and networking and storage. Though commercial revenue has been growing at a 3% clip in the last 5 years, finishing 2024 at 39.8 billion, the 3-year period was down 4.4%. Consumer was the biggest hit, down 5% on a 5-year basis and 17% on 3-year to close full year 2024 at 9.1 billion. Operating income for those two business lines grew slightly in the 5-year by 2.3%, though down 7% from the peak in 2022, producing an operating margin of 7.2%. Now to the valuations. Shares outstanding dropped by 7.7%, which will positively impact per share ratios year over year. The company spent $2 billion on share buybacks in fiscal 2024. That being said, earnings per share was $4.36, up 42.5%. Sales per share were down, however, to $120. Cash per share was also slightly lower by 7% to $10. Dell has negative shareholder equity, so the equity ratios are going to show negative numbers. Dell's PE is 27.2 compared to the S&P 500 at 27.85. PE growth is just 0.64. Leverage ratios. Debt ratio is 0.23. Debt to equity, not meaningful, given that Dell has negative equity. Interest coverage of just 4 suggests that they might have a high debt burden. Liquidity ratios with a ratio of 0.74, a quick ratio of 0.34, and a cash ratio of 0.15 are reasonable but could use a little improvement given that current liabilities exceeds current assets. Return on assets was just 4%. Return on equity, of course, isn't meaningful. Return on capital employed is 15.5% and return on invested capital is 13.6%. Not all that impressive. Cash flows were mixed. Operating cash flows were 8.7 billion, up 143% year over year. Investing cash outflows came in at 2.8 billion, largely due to capital expenditures. Financing cash flows were a negative 7 billion, weighed down by debt repayment and share buybacks, with free cash flow of the firm down 15% to 7.5 billion. Dell pays a dividend of $1.46, which is a 1.2% yield, growing at 8.4%. The payout ratio for Dell is 33%. Dell also announced a 20% increase in their dividend payment for shareholders of May 3rd, further driving the stock rally in the company, much like Meta did when they announced their first dividend. Enterprise value for Dell is 99 billion. That gives a 1.12 multiple to revenue, a 4.74 multiple to EBITDA, and a 13.2 multiple to free cash flow. Company guidance provided for 3 to 4% growth rate and an 8% plus in EPS for 2025. We used a gross margin of 23.6% and an operating margin of 5.9%, which is what they produced this year, to come up with our estimates. That means Dell is trading at a forward PE of 26.5. Key takeaways from the report: Dell has good free cash flow, gross margins are improving, the enterprise value multiple suggests that Dell is undervalued, and we like the dividend growth, including the announcement of the 20% hike, which is an indication of ample future earnings. On the con side, though, we think PE is rather high. The company has negative equity, so it's owned by the banks. Revenue growth is a problem, seeing that it has contracted for the last 3 years, and that is supported by their guidance, which only suggests a 3 to 4% growth in revenue in 2025. That being said, we're giving Dell a rating of neutral. We have no exposure to this company. Like and subscribe.